Hello, 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 Curvies. Happy Thursday and happy Life Insurance Month. On your way in, I hope you smash that like button, smash the subscribe button if you haven't already. Ring my bell so you can get notified next time your girl, Larger Curves, loads a video. And so you can become part of this beautiful, curvy community that we're growing over here in these YouTube streets. Of course, I had freaking technical difficulties this morning. Why'd I have everything planned? Everything was plugged in, but seven planets are in retrograde, Curvies. Retrograde. Seven planets at one time. Oh my goodness. My friend Sarah is here. Bonjour, Sarah. Yes, seven planets at one time are in freaking retrograde. Therefore, yes, Mercury's in retrograde till the 14th of September. Jupiter's in retrograde. Freaking, yeah. So yes, Sarah's right. It's so normal. Yay. Yeah, so of course I had everything plugged in, right? And then nothing was charged this morning. Yeah, Venus just went direct. Now Jupiter is going to be retrograde for I think through until we get to 2024 sometime. I'm pretty sure. Well, Jupiter being in retrograde is a good thing because it's about new beginnings and new stuff happening and yeah. Is Mercury retrograde in Virgo? So time to take care of life insurance. You, Sarah. Exactly. Exactly. Yes, it's a great time to take care of life insurance. You got to clean up all your loose ends and things like that. So let's go here. And so you guys, larger curves, me. I'm a life insurance agent. I'm a licensed life insurance agent, a licensed health agent, and I have had my license for a number of years now. And I'm also a real estate agent. And your girl, Larger Curves, tries to keep all these diversified sources of income, but also try not to be on a W-2 where I'm chained to a desk. But the life of an entrepreneur is very much so kind of has a chain on it of its own. It's a 24-hour chain. I mean, you're the head of everything. You're the CEO, your maintenance, you're the secretary, your scheduling, your marketing, your AP, your AR. You know what I'm saying? So I don't know if no, this is definitely a better situation for me personally. Um, because I prefer to be my own boss. I cannot. These businesses, corporations, everybody sees what happens. Those people work for 40 years and then their pension is gone listening to their boss. That's why I'm here to help you today for this life insurance thing. Now, let me see, is my technology up yet? Let's see what I can get because I had a whole reel for us and everything, you guys. I had a reel and everything, and now my phone just got back on. Why is my freaking there it is. Jesus. Jesus, Jesus, Jesus. I guess I'm just gonna let these ones come up because let's delete that one. And then I'm gonna hurry up and download this so we can have our reel to go with this. So you guys, Liam is upon us. Do you know what Liam is? Liam is Life Insurance Awareness Month. Isn't that a cute little acronym? Liam. Uh let's see. Isn't that a nice little acronym? I had a best friend in high school. Her brother's name was William, and we called him Liam. Yeah, it's so cute. Liam, Life Insurance Awareness Month. So, do you guys feel like life insurance is for the dead or for the living? Because the misnomer is that life insurance is for the dead. But really, life insurance is for the living, you guys, because you're going to be long gone. And if you had the foresight to protect your life with life insurance, then for the people you leave behind, it's for their life to keep going. Plus, there's a new hybrid life insurance, you guys. The hybrid life insurance allows you to have living benefits with allows you to have living benefits so that you, as the insured, can also still benefit from your life insurance while you're alive. And then when you die, you still leave life insurance benefits for your beneficiaries. And all of this is tax free, you guys. All of it, Liam. Yeah. All of it is tax free. So that's the great thing about life insurance. Now, there's I wanted to do the 10 things that you could do this month for yourself during Liam Life Insurance Awareness Month, rather. My attention is kind of split. I'm trying to get this video up for us. And I decided to do this. I'm going to do it again. I'm going to do it again and again and again and again and again and again and again because I'm on a crusade, you know. Families need to be protected. We see so many even stars die without a will, die without life insurance, die without their assets in a trust to be protected so they don't have to go through probate for 10 years. Cough, cough, Sherman Hensley. You know what I'm saying? Like, there are so many ways to protect ourselves and the assets that we grow. Um, and keep them out of the hands of probate and keep them out of the hands of let's download this, keep them out of the hands of, you know, the tax people too, because if you don't have your life insurance, which passes your benefits on tax free, then you will most likely be paying a large amount of taxes at the time of your passing. Here's one more thing. Let's pull this up. Clips. Add a video clip. Didn't I just download this? I'm so sorry, you guys. Let me see. Cancel. So do you guys have life insurance? Yes or no? If you have life insurance, put a 1 in the chat. If you don't have life insurance, oh, that's what the problem is. Put a 2 in the chat. Hmm. Let me see what you guys put. Who has life insurance? Yes, it's important to speak on it. Life insurance is very important. Let's see. Um, what can I do? Um, just a second, you guys. Thanks for hanging in here. If you haven't already, smash the buttons on your way in. Thanks a lot. So, life insurance, do you have it? Yes or no? If you don't, it's okay. If you're still healthy, you can get it. If you are not healthy, there are some other kind of forms of life insurance that you can look at. Um, it's not letting me upload this. So I saved it. And then I'm gonna go here. And I'm gonna send it. Let me see if I can send it this way. So let's get to your 10 things you can do. So if you have any old policies, you need to pull them out right now. Pull out your old policies right now. Check page 3 of most insurance policies show you how, if you have this type of policy, your cash is accumulating and what you can expect at what age. If your policy is structured correctly, then in your older years, you should have some money left. If your policy is structured incorrectly, then sometimes you can be paying a lot of money and end up with nothing at the end. And people have a lot of experiences about that. Let's see. So let's go sending that now. Also, because most people like buy it and they forget about it. They just buy it and then keep it paid. You know what I mean? And which is what you want to do. But you also want to make sure that you're staying up to date with the most current ways that you can be covered. And you can have more than one life insurance policy, you guys. It's kind of it's a way also to like, because you put in a little money now and then it grows cash that you can borrow against on a tax-free basis. And then if you don't pay yourself back, that's fine. That was your money from your policy, and it'll just be subtracted from the face value at the end for your beneficiary. So here's how it goes. If you have $100,000 policy, and that policy you borrow $25,000 in during the policy after you've grown it to $100,000 cash value. So your death benefit is $100,000 and your cash value is $100,000. If you borrow $25,000 of your cash value and choose never to pay it back, that's fine. You don't have to. You just borrowed money from yourself. You just did a loan from yourself to yourself without having to get approved, without having to go through any application thing. You just call the insurance company and say, I need 25 G's, and they cut you a check within 24, 48 hours, you guys, tax free. And then if you never pay yourself back, then let's say something happened and you passed away before you could pay it back, then it simply reduces your face value by 25,000, leaving 75,000 for your loved ones and beneficiaries. And they'll get that in a lump sum, tax-free payment. So see how it works out? It's kind of like a savings account slash life insurance benefits, right? However, there are a lot of benefits to putting your savings in a certain types of life insurance. There are several types of life insurance that we can go over. Let me see if this video got here yet. And if it did, will it play? Oh, here it is. Will it play? Let's see. Let's try the media player. Is it going to work? Yay! I was able to get it up. Okay, you guys, let's share. Sorry. I shall not be defeated, y'all. I shall not be defeated. You know what I'm saying? Took me a while, but they not stopping nothing. The devil is a lie. Not stopping nothing. Not stopping nothing. Look, okay, so here's my reel that I was preparing for us to have little visuals. So, as you know, I'm Larger Curves. Thanks for coming through. This was what I was going to say at the beginning. Smash the buttons and everything. Thanks for being here. I love my curvy crew. Now, this is how you guys know me on the YouTube streets. This is Life Insurance Awareness Month, also known as Liam, and today we're going to go over these 10 things you can do before it's over. Just real quick. I'm only going to keep you till like 8:15 tops because I got started 15 minutes late. This is my life insurance face, you guys. So this is what people see. Well, it's a little thinner now. Your girl so far lost 25 pounds now. I have on some leggings right now, you guys. And you know leggings are usually tight to your legs. My leggings are saggy. Oh my gosh, it looks and feels so strange. So, that girth on my jaw is a little thinner now, but I've always had cheeks. But this is what people see when I call them and or when they meet me. This is my insurance person face. I'm not animated. And then we have, let's see, okay, September's Life Insurance Awareness Month. Now, life insurance, it's better to be 5 years too early than 5 minutes too late, y'all. You better get the messaging. You better get the messaging on that. Okay. Now, the three things that determine your life insurance payment, your premium is your health, obviously. If you're super duper healthy and young, like 20s to 40, well, actually, 20s to 30 is the best age. Actually, you can get a life insurance policy for a child in your life now. And if it's whole life, the premium will never change. The premium will never change. And that means that if you get a baby, like I got my sons, these policies where the policy is only $100 a month together. So one is like 60 and one is 40. And their policies are called $1 million baby policy. So right now, while they're young, I'm paying a small amount. And over the years, it will accrue to the point where my sons, by the time they're in their 40s, will have access to the cash buildup in their policies of $1 million, you guys. It's possible. Okay. All for this minimal amount at the front, right? Now, like a full $1 million baby plan, I think that's a good 28,000 or something like that. It depends on how you structure it. But also getting it for your child or a grandchild or a niece or a nephew um, is super important because did you know that if you are diagnosed with something as a child, it can make you uninsurable for life as an adult? Did you know that? Yeah. Things like if you get your kid, if your child is diagnosed with ADHD, they can't get life insurance. Did you know that? If your kid is diagnosed with child asthma, they can't get life insurance. Isn't that crazy? Yeah, yeah. So, another reason to get it is before anything comes up. So, the younger and the healthier you are, the lower the premium, the more time you have to build the cash value, the more cash you'll have at the end. And there's other kind of things like riders where if something happens that you lost your job or something, then they would waive your premium while things were hard, as long as you have the cash value in your policy to pay your own premium, you guys. There's so many different things we can do, okay? But you never want to be 5 minutes too late, okay? Yes, you have to get coverage outside your job. It's super duper important. Now, let me tell you the thing about your coverage on your job. So, everybody, when you sign up for your benefits, you're so excited and you're like, oh my God, yes, I'll take these death benefits. But you never unsigned that paper. Those people will still get paid when you die. You guys. Anyway, and that coverage is usually very minuscule. It's usually like only 35,000, 25, might be 50,000, depending on how high sedity your job is. But that's not enough to take care of your family. As a life insurance professional, we have ways of determining amount of coverage necessary. We do the FIN number, your financial independence number. We do financial IQs, where to see if you know what your financial independence number is. We have the dime number. That's where you take your debt, income, mortgage, and any educational type. That's the acronym. any of those type of bills, because those are usually the major ones that need to be taken care of after a person passes. So it's really important to have all of these numbers covered. Is do you if you pass and you're the breadwinner, who's going to cover the house note? Do you have mortgage insurance? And I'm not talking about PMI because I'm also a real estate agent. So the PMI is the mortgage insurance to insure the mortgage for for the mortgage company. That's not going to pay your family's mortgage if you pass. But there's also insurance for mortgages where like if the main person dies, then they can have specifically $500,000 pay out to either pay the mortgage off or to use it to purchase a new house. There's types of insurance where if the person dies and you were going to be paying the college fund, then a check for $100,000 will be cut to the minor of your choice because you set that up for them. There's ways that if you're the main breadwinner and you have it set up that, if you decided that your wife doesn't need to work and you make $500,000 a year, what's she gonna do when you pass with your $500,000 a year? Well, there's income protection. You can pay to have your income protected, and it will pay your salary to that person either in a lump sum for however long you set it up, 2 years, 3 years, 5 years, 10 years, for that person to continue having the lifestyle of the $500,000 that you provided for them. So you don't want to be 5 minutes too late. Okay. Now, you don't buy life insurance because you're going to die, but because those you love are going to live. Life happens, you guys. And here's a little chart. I'm sorry it's not clearer for us, but life insurance across America, we're going to look at these numbers. 75 million American families are uninsured. There are retiring annuities that are also tied into life insurance. So let's see. So, like, if you have another good thing to do this month, so we already have check your old policies, check your FIN number, your financial independence number, do your dime number, see how much money your loved ones will need to continue to live as comfortable as you're setting them up. Um, and then look at any work policies specifically and see what they cover and when will they pay out. And also look at where you don't have coverage. So we talked about insurance for income, insurance for your mortgage, insurance for to ensure your children have access to the money you would have set aside for their college. Um, and if you have any 401ks, you should be looking at those right now because the thing about your 401k through your job is, hey, everybody, thanks for coming through. I appreciate you guys. Oh my gosh, I love that Mary is back. We'll talk about that soon. Um, that was so awesome. Yeah, I appreciate you all being here. So check out your 401k. So did you guys know that your 401k is also tied to life insurance in a way? Um, so because what you can do is for your retirement and you can roll it over to a fixed indexed annuity where you can create your own pension. So the thing with the 401k is that's all 401k means is that it's a tax code 401k, which simply means that if the employer matches your money, the employer gets a tax write-off right then, and you get tax deferred until you mandatorily remove it when you're in your 50s, guys. Do you think taxes are going to be higher or lower when you get in your 50s when it comes time to start doing your mandatory withdrawals from any 401ks or 403bs? Taxes are already going higher and higher and higher, right? As a matter of fact, there's a tax law coming down the pike from good old Joe, I believe, where they expect something to go up to 26% by 2026. And that's going to be huge. So I know that in the insurance industry, we're trying to help people roll over those monies into different situations where they can undo that imminent huge tax that's coming. They can lessen that. Okay. Let me see what else is on here. You can have your disability income. So there's insurance that you can check on this month. Long-term care insurance. That means that if you get any chronic illnesses, any kind of diagnoses, like if you have a stroke, if you get cancer, any terminal illnesses, then the policy pays you guys because obviously you're not going to be working if you're healing. So there's that. Um, yes, there's many kinds of life insurance to partake of. Now, the reasons why people buy life insurance is a lot. Like I said, there can be so many different reasons for people to buy life insurance. And you see how at the bottom of this it says it's from an annuity expert. That's because, like I was saying, life insurance and annuities mix in. Like I need, I need my health and life insurance license in order to sell fixed annuities. So all of this stuff, you have to be a licensed professional, and I'm not giving you individually right now any type of financial advice. If you're in a state that I service, I'll be glad to take this over. And also, I have fellow agents in all the states in Puerto Rico and Guam, um, Canada. So wherever you are, I can help get you covered. Let's see. So let's look at this. Why people buy life insurance. Let's see. Liam. So there's so many. I like this nail, but I can't see it real good. I tell you guys the truth. These eyeballs, I'm so thankful for them. Yeah, that is hecka blurry, even on my other copy. Let me go here. Here we go. Yeah, here we go. Can I see it better now? Okay, like I said, so people buy life insurance for income replacement. If the policy is a primary earner, life insurance can provide their dependents in the event of death. Debt repayment. Life insurance can be used to pay off debts like your mortgage, student loans, credit cards, so you don't burden your loved ones. Funeral expenses. Everybody knows life insurance can pay for funeral expenses. We have access to a funeral concierge service where as soon as you get the policy, you meet with the concierge, you tell them your wishes, and then when they get the call, your loved ones don't have to do anything except for dial their number. And they take care of everything to take the burden off your loved ones. Estate taxes. Life insurance can provide the funds to cover estate or inheritance taxes, preventing the need to sell off assets or properties. Life insurance can be used to pay for children's education. Life insurance funds are for education of policyholders when they pass away. And you can use it. Let's go here. For where were we? Business planning. Yep. Did you know that businesses are considered a person and so is a corporation? So if you're a business owner, you can have a BOLI. That's a business life insurance policy, or COLI is a corporate life insurance policy. And these types of policies can help business owners' death. So you can fund the buy sell agreement, or it can provide liquidity for your business. There's also a way to set up an executive bonus plan through your life insurance policy. If you're self-employed, you can pay yourself through your life insurance policy while also putting money there to grow cash value at around 12% with tax-free access. Are you guys listening? There's so many things. There's all kinds of new hybrid life insurances. Some types of life insurance, like permanent policies, which we also call whole life policies, build cash value, and the cash can be borrowed tax free, serving as a form of retirement income. Um, yep. So if you Google right now life insurance, most likely you're going to see a lot of term life insurances come up. A term life insurance means that the terms change, you guys. That means the premium's going to go up eventually. That means the terms are going to terminate eventually. Term life insurance is good for some things, but I would not bet on term life insurance for when you get to your 70s. I have so many clients that got talked into a term life insurance policy in their 40s, and they got a 30-year term life insurance policy in their 40s for $100 a month. Great. $5 million, whatever their coverage was. But it was only 30 years. So when they're turned 70, they need more insurance, obviously, because the term ended after 30 years. But how much do you think a premium is for a 70-year-old man? Any premium at age 70 is going to be astronomical. Okay? Even those little premiums that you see from everybody gets those AAA things to your house. Oh, you've been pre-approved. Uh, Even those are in the hundreds of dollars, but you're on a fixed income. Do you think you'll have the hundreds of extra discretionary income to spend on that? And then that's the type of policy that pisses people off because you just spent 30 years paying your $100 a month, and now you outlived your policy and you can't get nothing. And they have every right to never talk to you again, and they got 30 years of your $100 payments, and you outlive the policy, and now you need a new policy, and they got all your money. That's why people are mad at life insurance, but it's because they did not do the research and due diligence to find out there was another type of life insurance. Permanent life insurance. Terms don't change. Grow cash. Terms don't change. Grow cash. Okay? So you need to look at your permanent life insurance policies this month. Now, coverage from your job is not permanent. That's a form of term because when you get terminated from your job or leave your job by willingly terminating yourself, that is a form of term insurance. Therefore, the term will end with your employment. You're right. You have to get a better form of insurance. Um, yeah, yeah. Right on, Shay B. Thank you. Corey's in the house. Now, Corey, I recruited Corey, you guys. Me and Corey were YouTube street friends, and I'm always recruiting. You guys, life insurance can be quite lucrative. It is work, huh, Corey? It's hard working every day. Hard work, been a better day. Yeah, it's hard work. I already told you guys about when you're an entrepreneur, it's beyond 9 to 5. It's 24/7, you guys. And so you're going to have to do what you do for your business. You're going to have to be your own motivator, your own HR, your own everything. Okay. So I'm always looking for uh, like-minded individuals who are go-getter, entrepreneurial, who want to pave their own way, who are on a crusade to change the world and set families up in a way that they have no idea. We are all living like blind, you guys. I'm 54 years old, and while I've been introduced to these types of life insurances before, I did not understand at that time. And now I'm 54 and I'm on a crusade so that when I meet people who are my 24-year-old self and are like wanting to put into the 401k to, I'm doing air quotes, y'all, save your money. Don't put your money in the 401k. Put that little extra money to a life insurance, an indexed life insurance policy where your index is 12% annually and it's tax free, not tax deferred. That little $100 a month could be going to straight to a tax-free savings thing where you're gaining 12% at least annually, you guys, and never lose your $100 that you put in. You never lose your principal. So many ways to get through. And I'm on a mission. I'm like heated that this isn't taught in school. I feel like financial literacy is even a sellout. We need to be totally financially educated up in this piece. So let's get back to this list. Um, I already mentioned long-term care. So long-term care coverage is coming down the pike as a potential necessity and mandatory something that might come through for the states. What happened is the Gerber babies. Okay, so the Gerber babies, there were 75 million Gerber babies. Those Gerber babies now need long-term care. They're retiring, they're aging out, and it's going to be a huge burden on the healthcare system to the point where they are currently discussing making long-term care mandatory. That's another reason to get it early because as soon as it's mandatory, the price will go up. It might, maybe, allegedly. So, anyway, long term care coverage is some life insurance policy rider or an actual policy. So there's a couple ways to get this. You can get it as a rider, or yeah, that's how you get it. A rider means it rides on your insurance policy. So you have your life insurance policy for 500,000, for a million, for 2 million, for 50 million, whatever your situation is. And then you have a rider on that policy, kind of like an amendment, I guess you could say, on that policy that includes an additional coverage for lesser because it's with that one. So it's kind of like what's that when you group it together, you know? So because you put it together, it's a little cheaper than getting it standalone, but it covers the long-term care expenses like in-home care or nursing home. Okay. Then we also have charitable contributions. You can use your life insurance to name a charity as a beneficiary, turning the policy into a sizable charitable gift upon your death. You can use it for a wealth transfer. That's what I'm really trying to talk to my community specifically about is a great wealth transfer is about to take place. And we can get in on it. I was in a live the other day and somebody was talking about how the insurance companies specifically you gained most of their wealth off of black bodies during the transatlantic slave trade. And that is true. But that's not a reason not to play. I feel like for specifically melanated people, that's even more of a reason to play. The trillions of dollars these life insurance companies have at their disposal is because those policies on black bodies during the slave trade paid out to them, you guys. So now we have access as long as you're healthy and young. We don't even get to ask you what race you are in your application, you guys. This is a level playing field, okay? There is an opportunity here to start creating a legacy for your families from simply saving $100, $500 a month, you know? And for there are some people that put their entire check that they can discard into their policy. So like maybe they pay their bills with one check and then they decide that, oh, I don't need this other $3,000 a month. And they decide to put that into their specifically, and what I'm talking about is an indexed universal life policy where the cash grows at 12% and that you can then access. Okay. So talk about a wealth transfer. Be your own bank. Rockefeller was his own bank. He didn't have to go to anybody to borrow anything, because he was his own bank. You can use life insurance policies to never go get in the line for a loan at Wells Fargo again. You can use your life policies to never go to Citibank and ask for an auto loan again. You never have to go get a payday loan again. You can use your life policies as your personal family bank. Okay. So, yeah, Corey knows it's hard work. It's hard work, but I'm on a mission. I'm on a mission. And I get disappointed a lot because some people don't see the vision. Some people aren't for it. But I'm just keeping on pushing because there's a lot for everyone. No, there's three yeses and three people that'll get it. You know what I mean? So let's see what else it does. The wealth transfer life insurance can efficiently pass wealth to the next generation, providing tax advantaged inheritance. What Because the benefits from your life insurance policy pass to your beneficiaries tax free. Tax free, you guys, in most cases. Now, I'm not sure why it says tax advantages. But okay, then there's legacy planning. Beyond the wealth, life insurance can help an individual have a legacy, like an endowed scholarship to their alma mater. Okay. Life insurance also is peace of mind. Like, that commercial for Nationwide where the lady's gardening and the husband is sitting in his, what's those Adirondack chairs in the yard, and then the distance there's obviously some kind of hurricane looming, and the wind is coming, and there's black clouds and thunder rolling in, and she's like, do we? And he's like, yeah, we got it covered. And she's like, well, what about? He's like, we got it covered. And they're just chilling and the storm is on the way. That's because they have peace of mind, you guys. They have peace of mind knowing that their family will be financially taken care of, and that even if that storm washes away everything at their house, they have the different insurances to cover each thing. That's the peace of mind that people deserve. Living paycheck to paycheck, wondering where your next dollar is going to come from, not wanting to crack open your 401k because you're going to get not only penalized and fees for early withdrawal. I had a friend during the pandemic. She needed money from her 401k. And the way they set it up, they make you think, oh, great, it's going to be there for you. And she went to get $2,000 out of her thing during the pandemic. She requested two, but only ended up with like 1450 because of fees and penalties, you guys. That is huge. Huge. And people want to say that fixed indexed annuities or accounts like that, oh, the fees are high. Oh, the fees are high. You don't think $400, $500 is high on a request for $2,000? That's loan shark prices, y'all. If you request money from your life insurance policy, $2,000, they'll just give you $2,000. No fees, no penalties, no nothing. But because the hype around 401ks has been dangled in our faces, and the secret of indexed universal life insurance policies and fixed indexed annuities has been hidden in plain sight, people go with what they've heard the most about. I have a 401k. It's great. I'm sitting on $250,000. Well, by the time you finish with your fees and taxes, ma'am, your $250,000 is going to maybe be 180, maybe. You know what I'm saying? So is it really in your interest? Because your company, whatever they matched you, they got to write it all off in real time. You, on the other hand, have to now pay deferred tax on $250,000. Do the math, y'all. Do the math. And I know I've been in the financial services industry for what year was that? 2010-ish. Since about 2010. Um and tax professionals, CPAs hate dealing with your 401ks. They hate seeing how much money you're losing. They hate watching all that money just sit there and they have to do all these special calculations for all the stuff, and they don't even really serve you. Do your research on your own, you guys. I'm not trying to change your entire mind. I'm just trying to help you shift your mindset to allow space for these awesome other products that they hide in plain sight. Okay, let's go finish our list. We only have a couple more. Let's see. Okay. So there's this thing called equalizing inheritances. If the majority of the estate is tied up in a family business or property, life insurance can provide a way to give an equal inheritance to heirs who are not involved in the business or property. So you can divvy up your beneficiaries. Um, Most places will let you allocate your beneficiaries however much you want. Some places are like 25%, half and half, 30%, um, or whatever. But this is your policy, this is your asset, it's under your direct control, and whoever you list as a beneficiary will get paid from that policy. Now, like I just said, you can use your life insurance policy. Now, when I first started in finance, I was trying to get to these $1 million policies because I heard Waka Flocka say that he never goes to a bank. He only uses his life insurance policies as collateral. And sure enough, you can use your life insurance policy as collateral for loans. The policy can sometimes be used as collateral for a loan, providing the policyholder additional financial flexibility. And finally, you can cover specific expenses like we already talked about, your child's wedding, the mortgage, and income. So, do you have the right kind of life insurance, Curvy? Do you need to talk to me about something? Is Georgia one of your states? Why, yes. Yes, it is. Why, yes, it is. One of my states, indeed. And I would love to talk to you. I do complimentary financial um, reviews. I do complimentary policy reviews. I have even complimentary access to will kits. Oh yeah, and if you already feel like you have everything set up and all you need is a trust, do you own any property, you guys? Because part of me as a life insurance agent and a real estate agent, I feel like it's super important to have asset protection. Okay. Now, asset protection that I'm talking about for your property, for your business, is a trust. There's revocable trust, there's irrevocable trust. I have access to a network from my business of lawyers where you can get a trust on a payment plan for $50 a month, you guys. You can get a revocable trust, which is the very usually expensive one. They start at 3,000, and you can get an irrevocable trust flat fee under $1,000 and make payments of $50 a month and start today ensuring that your family doesn't have to go through probate. Now, will usually means will go through probate. Trusts are usually ironclad and do not have to engage the probate process. And so you want to make sure that in your trust, you can you can put your life insurance policies to the trust, and that way grow a bigger family trust, and it'll protect your house in probate. Like, I'm on a mission right now. I have a lot of passion right now to get people protected that way also, because did you notice after the demic how many more homeless people there are that got underwater during the pandemic and lost their house and stuff? A trust, I feel, would have made that a little harder to happen, because they would have been protected in a different way with an additional layer of protection. And that's all I'm really trying to help you guys do, is be protected during this life insurance awareness month. Don't let another day go by. See what you can afford. There's the rule of 72. This is very important. Let's go here real quick. Um, that's the compounding. This 12 is the 12%. Index universal life insurance policies can double your money through the rule of 72. You simply take the interest rate, divide it by 72, and it tells you how long it will take to double your money. So this 29-year-old invested $10,000 at 6%. So in 12 years, they'll have uh, doubled their money. So there's all different kinds of ways. There's strategies and structures to get to the wealth. Set up your family the way that you want it set up. While you're young and healthy is the best time to get your insurance, okay? And don't forget about checking those riders. Don't forget the difference, term or perm, and the reasons to buy life insurance and what the difference is. Group life insurance is for your job, the dime method, and it's Life Insurance Awareness Month. Single people need it, married people need it, kids need it, we all need it. And I need to let you guys go. So, thanks for tuning in today, you guys. I hope you enjoyed our first little Liam chat about Life Insurance Awareness Month. I appreciate all my Curvies for coming through. But you know, I homeschool these kids. It's time to get to the classroom. So leave a comment down below. If you need my help, get at me. My email is largercurves@gmail.com. And if you email me, I'll be glad to get at you and we can talk and set up a Zoom call and see how we can get you what you want. Okay. I'm in the habit of solutions. I'm a solutionator. I love helping people's dreams come true. And I love ensuring that families are set up for success. So, yes. All right. Put it on TikTok. Right on. Thank you. I love Sarah. Sarah's my sister from another mister over there in the France. Okay, you guys, smash my buttons, ring the bell, and leave a comment. I love hearing from you. I'll see you in the next video.